I know somebody who's on top of things. David Morgan of the Morgan Report.
David is the publisher of the Morgan Report, leading U.S. expert on precious metals. You can learn more at themorganreport.com. David, welcome to the program.
Jason, great to be with you.
David, how you doing today, buddy?
Well, I'm a bit wound up. I'm preparing for the Asian conference in Hong Kong here, and looking at a lot of panels. They got me on platinum, palladium, copper, silver, and gold, of course. And it's a very, very big conference sponsored by Standard Chartered Bank, which is the largest bank in Asia. So a little bit antsy, Alan, but ready for your show as well.
Well, what time do you have your conference?
It's actually in a couple days. It's almost like a 17-hour flight to Hong Kong, so you kind of lose a day going and gain a day coming back. But it's Wednesday and Thursday of this week.
Well, I'm sure you will do very well. Now, what are you going to be telling those fellas?
Well, actually, Alan, I really went over the top on my main speech, my keynote. It's called Silver, Hyperinflation, and Demise of America. And so I'm going to be covering all of those topics, a lot of monetary history, a lot of what happened in the last depression to precious metals, and what happened to base metals, and then, of course, the demise of America. And it's not as bad as the title sounds, but certainly we have been in a major downtrend in real terms, not in inflation terms, but in real terms, since about 1976. And what that means is the average worker in America has had a declining lifestyle from 1976 to present day. That's not everybody, and you might have got more quote-unquote money. In other words, your salary might be bigger, but your purchasing power has continually gone down for the average person. And they've made up for that by borrowing, which is, of course, what took place during the big housing bubble, was people were able to use their homes as an ATM and get that car so it's, match their neighbor's car or whatever's going on in their heads. And, of course, all that's basically blowing up at this point in time, and now people are, grasping reality slowly.
One succinct way of saying it, and I've used this expression before, but we spent money we didn't have on things we did not need, and as a result, it's now time to pay the piper.
Well said, Alan. I like that.
Well, you can use it. I borrowed it from somebody. I don't know who. I had somebody say that there's never been an original thought, but I think I've had a few. These central bankers right now around the world are threatening some more coordinated action. That was the rumor that sparked that 200-point rally in the last hour of yesterday's session. That should bode well for anyone holding gold and silver, at least in terms of nominal appreciation of the two metals, should it not?
I believe so, and I actually believe doing nothing does as well. I mean, I'm so bullish at this point because the metals are a crisis hedge or an uncertainty hedge, and this stuff isn't working. The bankers know it isn't working, but, it does quell the markets or surprise the markets or help the markets on a very momentary basis. But everyone's in this condition of hope that, we hope that this will work or whatever. Well, keeping interest rates low and flooding the banks with money has not worked. I mean, conditions are not getting better. You could make an argument that, a couple of quarters or a couple of reports in a row look better, but that's insignificant in the bigger picture. And unfortunately, the banks don't really have many other options.
Well, David, back to this topic of debt. Obviously, we're seeing the central banks right now showing that they are very willing to continue to crank up the printing press. But at the same time, we have a lot of debt that needs to work its way through the system. And we have some folks out there that are saying as the debt deleverages, we are going to see that have a downside pressuring effect on the metals. Do you buy into that thesis?
Somewhat I do. I've been talking for a long time about what I call the deflationary scare. And in today's fractional reserve banking system that's existed for quite some time, when you decrease the credit, because it's basically money and credit. Money is something I consider physical, even in a fiat system. A physical piece of paper is different than than a bank entry that's credit only. So as the credit declines, that could put a contraction in the economy and could have some downward pressure on the metals. In fact, that's what we saw very quickly in 2008 when basically we almost fell off a cliff. That was a huge deleveraging in a very short amount of time. So certainly it can affect the metals. It affected silver quite a bit. It did affect gold somewhat. And could it happen again, or will it happen again? Probably. But in the longer term, I still believe that you're going to see the precious metals in value basis terms continue to appreciate. Even if you had a huge deflation, which I don't rule out, but I don't think that's the way it's going to unwind. But if you did, you still have the purchasing power value of those metals, and that's what you'd want to find out, what was happening or what they were worth, because gold and silver's purchasing power probably go up even in that scenario. In other words, an ounce of silver would probably buy you more in that scenario than it would currently.
So again, it looks like that the metals are a protection, a storer of value, a protector of wealth. But there's also some opportunities here to profit, particularly as we've discussed in the past weeks in the mining sector. Can you tell our listeners real quick how they can actually look over your shoulder and see some of the moves that you're making in this current market?
Absolutely. Just go to themorganreport.com. You can get on our free email list if you'd like to do that. But on top of that, our membership services has 3 levels. A beginner level, which is a e-letter only, which is usually about 12 pages on our thoughts and our stock recommendations. The over-the-shoulder service is that service and the ability to see my trades. I chart out in front of you what I see happening. There was a very good trade that's still on that I think is still worth putting on. We're already profitable on it, and I like long-term trades. I like to position trade where something on for a couple months, 3 months, sometimes 6 months. I had a platinum spread on where I was short gold, long platinum, and then when the price got to parity again, meaning gold and platinum were the same price, it took off the trade. So that was a pretty good winner. It took about 3 months, but those are the kinds of trades I like.
Well, I think that these markets are just about to start to get interesting. We've obviously got a lot going on in Europe. We've got a lot going on right here at home in the United States, and if you want to be actively involved in these markets, you need to have the information necessary to do so, and a great way to do that is to visit themorganreport.com. David Morgan, we certainly appreciate your time. It's been a pleasure as always.
Have a fun trip, David.
I will. I'll talk to you guys when I get back in a couple weeks. Thank you, Jason. Thank you, Alan.
Thank you, David.